It's time to do Friday Business. Welcome to 25 minutes of giving you updates from the world of business. This is Business Incorporated, and here's what we have prepared for you. In Egypt, there's been an extension of trading hours. Shops are open till 11 p.m. The United Kingdom is seeking ways of having a tighter oversight over Libyan oil. Good days ahead for teachers in Zimbabwe. Their pay would hit $1,397. You're welcome to the program. I'm Ini John Mekwa. We start from the global space, where oil prices were off their highs on Friday amid persistent tensions around the Strait of Hormuz, with the vital shipping lane still largely closed despite a ceasefire deal between the U.S. and Iran. U.S. President Donald Trump has warned Iran to stop now if it was charging tankers to transit the Strait, a move that risks undermining a 2-week ceasefire agreement that was contingent on opening of the waterway. Shipping flows through the choke point, which handled about 20% of global oil supply before the war, remain severely restricted, keeping markets on edge. And of course, this indicates that most ships going through the Strait in the past day were linked to Iran. And all of this adds up to this green color that we see on the board. For Brent, we see it's up 0.55%, $96.45 a barrel. WTI, yes, that's an unusual scenario, persisting for a couple of days now, even though we had some breaks in between. You see, more than Brent. That's unusual. Seems to be becoming unusual now. It's $98.41 after it gained 0.55%. Gas is closely related to this, and we see that also surging 0.15%. It's now $2.674 for natural gas. Well, Trump's top economic advisor, Kevin Hassett, has said that getting even one oil tanker across the Strait will provide a huge chunk of what's missing. And, of course, other market players and traders are on this matter. Well, still staying with oil, the United Kingdom, acting as the pen holder on the Libya file, has submitted a draft resolution to the United Nations Security Council, and it's aimed at tightening oversight on Libyan oil, including banning the deposit of export revenues outside the National Oil Corporation's account at the Libyan Foreign Bank. The draft focuses on preventing the financing of parallel entities, unifying revenues, and expanding international sanctions to target those involved in oil smuggling. Key provisions include the prohibiting of the deposit of crude oil revenues outside official NOC accounts, and reaffirming that the National Oil Corporation is the sole entity responsible for marketing and exporting oil. It's also proposing stricter sanctions by widening the scope to include individuals and entities involved in oil smuggling or violations of the arms embargo, and enhancing transparency by enabling oversight bodies to directly access NOC data and contracts. We're still around oil. South Africa's opposition party leader, Julius Malema, has welcomed the temporary fuel levy relief as an emergency measure. And this comes as motorists begin this month. They were hit with fuel increase. But despite this, the Economic Freedom Fighters, that's the EFF leader, says that the party will still continue with the court's challenge on the fuel levy, in which it argues that there should be a permanent removal of fuel levy.
South Africans are confronting historic fuel price increase that are piling pressure on already stressed household budgets. Petrol prices have increased by over 5 rand per litre, with diesel increase even higher at over 10 rand in some regions, while paraffin and energy costs rise at the same time. The highs feed directly into the cost of food, transport and basic services, deepening the cost of living crisis. The temporary 3 rand fuel levy relief is welcome, but not enough against sustained global price pressure and will expire sooner unless extended. We are currently challenging the rise of the fuel levies in court, as we have directly seen that the National Treasury is unilaterally making tax increases without consultation with legislative bodies who represent the people. The EFF demands that the government implements long-term relief for all working and poor South Africans, not just temporary measures.
And away from oil and gas now, gold prices edge lower while staying on track for a third straight weekly gain as the markets reassess the chances of U.S. interest rate cuts if the fragile U.S.-Iran ceasefire holds. The dollar was set for a 1.4% weekly drop, making bullion priced into the currency cheaper for holders of other currencies. So we see a continuity of what we had about this time yesterday. Yesterday we saw red colors. Today we see more reds anyways. Spot gold is down 0.71%. The price is at 4,783.70. Spot silver is more than 1% in the red. Platinum more than 2% down. And palladium 1.31% in the red. 1,546.50. Now, copper always seems to stand out, although in the last couple of days it's been in line with the other metals, but today it stands out again. It's the lone gainer at this time, 0.8%, up $5.812. And well, we know that it's all connected to the war in the Middle East and everything, every conversation that's been happening around there. Markets are also focusing on the March U.S. Consumer Price Index. That's due later on today. And of course, we'll see that feeding into the sentiment around the markets. Now, the Egyptian government, headed by the Prime Minister Mustafa Madbouly, has announced the extension of the 11 p.m. curfew for shops until the end of April. Tourists and archaeological sites are exempt from this measure. The Prime Minister explains that the decision to extend shop closing times comes as part of the government's effort to strike a balance between regulating commercial activities and easing the burden on citizens. He notes that the government is adopting a gradual approach in implementing economic and service-related measures. It also adds extending the decision aims to give markets an opportunity to adapt. In this way, there will be no sudden impact on trade or daily activities, according to the Prime Minister. In Zimbabwe, private school teachers and education sector workers in the country could now earn up to $1,397, and that's following the introduction of a new minimum wage structure under a collective bargaining agreement. The development was confirmed yesterday, April 9, by Nick Mangwana, the Permanent Secretary for Information, who outlined the updated salary framework and payment modalities for institutions across the sector. Munganga said that the new wage schedule is primarily denominated in the United States dollars, although some institutions may pay in local currency equivalents. He adds that payments in local currency must comply with statutory instrument of 185 of 2000 or be guided by the prevailing bank rate, whichever is higher. Kenya's satellite communications sector is undergoing a major regulatory shift following the introduction of significantly higher license fees, a move that's set to reshape competition, raise operating costs, and potentially alter the pace of connectivity expansion across the country. The changes introduced by the Communications Authority of Kenya form part of the revised telecommunications market structure for 2026. Under the new framework, satellite service providers, including global players like Starlink, must obtain a new international gateway systems and services license that costs at least 15 million Kenyan shillings, and that's approximately $115,000. That's for a 15-year term, or up to 45 million Kenyan shillings for a 25-year license. In addition to the upfront license fees, operators are now required to pay an annual levy of 0.4% of gross turnover with a minimum payment threshold of 4 million Kenyan shillings. And this marks a sharp departure from the previous regime, where companies operated under a flat satellite landing rights license that costs about $12,500. That's about 1.6 million Kenyan shillings. And this represents a steep increase in the cost of doing business. Pakistan and Ethiopia have agreed to explore establishing a trilateral maritime alliance, potentially involving Djibouti, to enhance trade connectivity between Asia and Africa. An understanding was reached during a meeting between the Federal Ministry for Maritime Affairs, Mr. Anwar Chandouri, and Ethiopian Ambassador Dr. Omar Hussein, who called on the minister for the first time since assuming his diplomatic assignment. The two sides reviewed proposals and measures to expand bilateral trade and economic engagement. During the meeting, the minister underscored Pakistan's growing focus on expanding maritime links with African nations and proposed forming a three-country alliance comprising Pakistan, Djibouti, and Ethiopia. He added that the framework could be expanded to include other countries through mutual consultations. Let's head to the markets now and see what's happening. And today we are looking at Nigeria's fixed income market. Been a while since we put our attention there, so let's see what has been happening. For the close of trade yesterday, we did see these highlights from the FGN bonds here in Nigeria, that the FGN bond market opened quietly, minimal early trading activity, and the session progress, pockets of demand surface, and it came to the mid-tenor papers, especially 2032, that's maturing 2032, and we saw the yield at 16.45. For 2033, almost there, also 16.40. And by market close, average yields across benchmark bonds were broadly stable, showing little deviation from opening levels. Do we say it's a boring market? I wonder. Well, the market close average yields across benchmark were broadly stable, and the outlook is cautious sentiment is expected to persist in near-term. Investors maintain a defensive posture amid globally uncertain market condition. Now, for the treasury bills, we see that the secondary market opened strong, buoyed by a mixed demand from the previous day. That was Wednesday, and the newly issued one-year NTB attracted the most. The short term always attracts the most. And look at the yields. The yields are 15, not as much, well, expectedly, not as much as the longer security. This is at 15.85. Shorter tenures drew demand. 91-day was at 15.60, and 182 was 15.8. And CBN also, they offered a 600 billion naira across 68 and 138-day bills. Demand was exceptionally strong. Total subscription 2.55 and total allotment 2.32 trillion naira. Let's understand this even more as we speak this afternoon with Ajibola Tobiosho. She is the Executive Director of Tungrade Alliance Limited and joins us virtually. Hi, Ajibola. Welcome to the program.
Hi. Good afternoon. Good afternoon.
Yeah, so we just saw numbers from yesterday's trade, especially for the treasury bills. It's kind of quiet. Is it boring in the market these days?
No, not at all. It's not boring at all. Recently, we've seen activities. I mean, activities in fixed income would always be high because aside the foreign invest, you always have local invest, the likes of PFAs, asset management, insurance. They always have to engage in this market, so it can never be boring. I mean, yeah, there are times where you have not so active session, but it will just likely be because the market is tired of the previous active sessions, or people are just trying to wrap up their book. I mean, today is Friday. Friday is usually very very not so active. That's not necessarily because people don't have to buy. It's just because people are just, trying to wrap up their book for the week. Yes, there was an auction this week on Wednesday, and the secondary market has traded actively on that paper most especially, and that's largely because the auction result came out lower than what it was expected to come out from, 16.199. Market expectation was around 16.35 and 16.4. As a result of that, we saw a lot of participants, a lot of people trying to buy up secondary market, and that's why you saw the discount rate drop below 16% to about 15.85. As at this trading session, we're still trading at the moment. Market is trading around 15.8, 15.75 on the recently issued one-year paper.
So, these days, looks like the days of, having yields at about 20, 19, 18%, those days seem to be gone, or at least, is there anything that can bring those days back? Even though this is good for the government, but I can't say so for the investors.
So, right, the discount rates, the yield on this discount rate is still close to 19, it's about 18.83, which is not far, right? But from where it closed at the auction is about 19.2. We expect, usually it's about demand and supply. Where demand is high, you see rates drop. When demand is low, you see rate go high. What the federal government has tried to do in recent time is that they've tried to be very strict as to the amounts they flow into the auction, as to the amount that they release for people to buy. So as a result, you get to see rates come down at the auction, and then which flows into the secondary market. People are still largely interested in short-term investment, and that's because we have different investment horizons for different market participants, especially the asset management that will always have to buy short-term instruments. So whether or not it is trading at 17% yield, 18% or 19%, trust me, there will always be people that are interested to buy. I don't think it's far from where we expect the market to be, coming from the fact that inflation too has been down. Inflation result, even though we expect it to go up because of oil prices have been going up. But at the end of the day, the short-term curve would always move after the inflation rate, and it's still around where we expect rate to be in the secondary market, to be honest. It's not far off.
So, Ajibula, I'm just casting my mind back about this time last year, and we know that we did feel a lot of movements and activity from the government in the market. When you compare it year on year, the movements and the activity of the federal government in the fixed income market, what are your thoughts? What are your observations?
So last year, it was bad. For the government, anytime they're raising rates at high level, it's bad for them, right? So comparing last year to this year, last year we have to remember that inflation too was still very, very high. We still saw like the double. Despite the fact that they had already rebased and did all that, inflation rate was still around the highs of 18 and 19 levels. Do you understand what I mean? So at the end of the day, short-term, like I said, short-term rate, we're going to focus on treasury bills, for instance. Short-term rate is still largely going to mirror inflation rates, while the bond and on the rest, move maybe slightly away. And then also last year, we had FPIs that were coming in. They were just trying to attract them. So the CBN side had to do everything to keep rates right so that the foreign investor could be interested in our market. Right now, dollar has been stabilized. A lot of things have stabilized, and it's not like they don't need money yet. But the yield pickup is still fair. The rest of the world, yield is dropping in the rest of the world. So why do we need to keep our rate very high? If you get what I mean. If you look at the US market, the UK market, the Europe, everywhere, yields are becoming lower. If not because of the war thing that has been happening lately, you should expect that yield should continue to drop all around the world. Do you get what I mean? So at the end of the day, we would always continue to mirror what the market wants and what we expect, or what we are trying to achieve. The CBN wants to achieve something completely different from the fiscal side. At the end of the day, the fiscal side wants to raise money as cheap as possible, while the CBN wants to ensure they maintain price stability, FX stability, and also get in more and more investment into the country as much as they can.
And investors want to ensure that they make as much profit on their investment.
Exactly, and they are making as much profit. Trust me, they are. Because if you have to look at the cost of carry, it's still the spread is still there. These people still love our market. The spread is still there, and as long as they continue, investors, all they want to see is the spread. As long as they see their spread, they don't care how it is moving. If the dollar rate drops, right, and Naira 2 drops, at the end of the day, the spread that they had last year will still be the spread that they have this year, given that it's both dollar and Naira rate that drop. If you get what I'm trying to explain.
Yeah, I understand. Thank you so much, Ajibola. I mean, and it's important, as you noted, that it's not just about Nigeria now. It's a geopolitical issue, and it's affecting everybody. Every market is affected at this time. Thank you so much, Ajibola Tobiasho, the ED of Tungrade Alliance Limited. All right, so let's go to other markets now, of course, starting with Nigeria's equity market, looking at the number for intraday. That would be nice if I could have that, but we know it's positive. Nigeria is staying on the positive trend. It doesn't matter how tiny it is, at least we still have the green color. Yeah, so we're sustaining at 203,000, which we hit yesterday. This is the first time we're hitting 203,000 level. So congratulations, as I said yesterday, and we're building on that. 203,199.20. It's up 0.02%. Johannesburg in South Africa is also positive. Egypt is closed today, but closed positive at the close of trade yesterday. It's getting close to 50,000 right there. NSE from Thursday also positive. The African markets are looking good. We move to the Middle East and we see mixed sentiments. Only two markets trade in the Middle East on Fridays, just Dubai and Abu Dhabi, and we see them on the opposite side. While Dubai is positive, Abu Dhabi is negative, and these are closed, but they closed also on opposite sides yesterday, Thursday. Moving over to the United States, stock features, we know, of course, a lot of volatility is still going on right there, especially after Iran seemed not to be so happy with the agreement or the attack from Israel to Lebanon. So we see mixed sentiment. The Dow is negative, S&P positive as well as NASDAQ. Let's go to Asia. The market is closed at this time in Asia, but they're looking green, recovered from that volatility that we saw hugely yesterday. Nikkei, Kospi, Hang Seng, all positive. If we consider the other markets on that continent, that's Shanghai and Nifty 50, all positive, recovered from the drop that we saw yesterday. Perhaps investors saw, the low price and decided to take that opportunity and get on board, and so that changed the color. Let's head to Berlin now and see what's happening. Lars tells us what's going on. In the middle of all of this, Lars, of course, every investor is affected, and the war is on the lip of every investor at this time. Lars, what's going on there in Berlin?
German businesses, not unlike those in other European countries, have seen their prices for oil and gas skyrocket in recent weeks, ever since the US and Israel started the attacks against Iran. Specifically, the closing of the Strait of Hormuz and the dramatically rising oil and gas prices have really put a heavy toll on doing business here. However, things were just as bad for consumers, who feel the pinch too. Nowhere as much as at the pump. Gas and diesel prices across Germany have risen by around 40%, and now that we're seeing the beginnings of a de-escalation and a lower oil price, those prices at the pump have not actually gone down. It's a phenomenon we've seen before in the oil and gas sector. When prices are rising, companies are quick to pass that on to consumers, and when prices are falling, however, they're very hesitant to adjust their prices accordingly. So a de-escalation in the Middle East is not a de-escalation in people's wallets, and that is, of course, due to the fact that there's a huge backlog now at the Strait of Hormuz, that capacities have been lowered and have to be brought up again. There are oil and gas plants and refineries destroyed. All that what made prices rise cannot be fixed in a matter of days or even weeks. So prices for businesses and consumers will likely remain high for a while.
Fortunately there, Lars, but what are businesses doing to soften this blow?
There is no quick fix for them, but we're seeing that many companies are in fact showing an increased interest in freeing themselves as much as possible from oil and gas, that they're trying to finally take initiative to get out of fossil fuels. There is a recent survey, and one of the people behind it said that many industrial firms are now, quote, increasingly considering installing solar power systems or concluding supply contracts for electricity from renewable energy sources. All this would have been possible to do for years, of course. So in a way, it is quite frustrating to see that once again, it takes a crisis to move companies towards doing what they should have done anyway. But at least they're seeing the light now. For many, it should be rather easy to source their energy from solar panels or wind turbines, depending, of course, on where a company is located. Of course, this takes time. Meanwhile, it seems some are also trying to shift parts of production into the night when electricity is cheaper than during daytime.
Yeah, well, some of the realities of our time. Thank you so much, Lars, and do have a great weekend. Let's see what's happening with cryptocurrency now. We see a bit of recovery there. In 24 hours, price of Bitcoin has increased about 1.63%, 72,292.33. Ethereum is still hanging around 2,200, 2,224 right there. Well, at least we have more greens today, and some stories making the headlines. Some interesting stories, I have to tell you. Iran, for instance, is demanding cryptocurrency payments from shipping companies that want to go through the Strait of Hormuz. So cryptocurrency comes in here again amidst all of this geopolitics and the war and everything. So cryptocurrency is now at the Strait of Hormuz. And in Africa, Africa has been termed the fastest growing crypto market and is shifting from rapid expansion to more controlled and disciplined phase as crypto fraud across the continent dropped by 28%. But the risks are not over. It's still there, even though we see that there's a drop in those fraud. And then in Hong Kong has issued its first license for fiat-backed stablecoins, a major step in the city's move to develop regulated digital currencies in global finance. This is according to Hong Kong Monetary Authority. And it happened today, actually, so it's fresh. And Japan's cabinet officially approved legislation also today, reclassifying cryptocurrencies as financial instruments. That's under the Financial Instruments and Exchange Act. And the new regulations will combat insider trading, mandate annual disclosures by issuers, and bring crypto under stricter oversight equivalent to traditional securities. So countries are making the move, adopting cryptocurrency, and stiffer regulations, of course, will get trust, more trust of the people. Well, those are the headlines, and that's it on the program. Thank you so much for being a part of Business Incorporated. All through the week, we appreciate your time. Do go to our YouTube channel and watch Business Morning, Business Incorporated, all through the weekend until we come your way again next week. I'm Ini John Mekwa. Bye-bye.